Hey, it's Ed here for Counter Capital, and on today's video we're taking a look at macro counts for AVAX. Again, we are starting on a very hard time frame. This is daily time frame, again starting from around the lows of 2020 September, and since then we've had a rally, consolidation, and now this kind of pump. And on this video we're checking out the couple different variations that I could come up with for AVAX and see what the future for both of these bearish and bullish counts would hold up. So let's start with the more of a bull count, because this is still one of very possible areas and ideas that I have for more of the general markets as well. But again, this does not have to happen, and this could very well be completely different. Now, let's start again from the very lows that we have. This is from September 2020, and since then we have a very much of a decent looking structure here. The issue is that how low this wave 4 came down to, which is again beyond 0.5 or 50% retracement on log scale, and well beyond, like, I don't know how much this even is, like so much of the retracement, 85%. Now, I'm not quite sure if I should label that as such, but again, we have to be using log scale on these, because otherwise we can't even structurally see any kind of patterns here. So that's why I'm using log instead of just a regular scale. But yeah, this is the bullish scenario. Overall, we would be starting from the significant low into the highs and have a possible fire wave here. There is only divergences at the fifth wave here, or third to fifth, and not inside from the third to fifth, or third to fifth. That is notable. So again, that goes against this count a bit, but again, these fifth waves tend to be massive. This is 1400%, and this one was 2500% or 2300. So massive gains on both of these legs. So that has to be taken into account as well, that it's not always perfect. But in this one, again, the main idea is that this is the start of something. So either wave 1 or wave A. Then we would have some kind of fire wave coming down, where you could have this as a 1 2 1 2 3 4 5 3 4 and 5. You could have some kind of diagonal at the end, and this would be again the first structure coming down. Now locally this is bearish. Why? Because again, we would be expecting this to be start of something and then have an expanded flat here. Either it's done already, or we would be looking for wave 4 consolidation, one more pump here to get some kind of 1 2 3 4 and 5 structure complete, and then this massive nuke, similar to this first structure over here that started from the 2021 highs all the way to January 2023, or the basically the change of the year. And yeah, this is still a very much of a possibility. Now, I gotta again say that this is only based on log scale. If we are looking at arithmetic scale, you can see that this pump for the C wave is definitely abnormal. It goes so well beyond the 2 to 1 extension that it doesn't really make too much sense. Structurally, log scale, it still looks fine as is, but I would not really hold too much into that, just because again it is only supported on a log scale. How to trade this is, if we see a fire wave structure, you could be looking for a retracement and go against the high for a short. The issue here is that we started, to me, which looks better as a 3-way structure coming down. So it is still possible that we are in some kind of 3-wave structure here before we get one more pump, take out the highs, take out the liquidity, get into one of these resistance areas here that we've had previously, get stuck on there, and then just nuke. So those are the things that I would be looking for this scenario overall. Of course, as this is a bull count, after that C wave here, we could be looking for these areas here around $4, $3, and then we could be looking for another massive run if this is the case. But this would require Bitcoin to dump again massively, and as we did get this 95% correction here, it would be yet another one of those similar 95% corrections back to these areas here. But yeah, that's the bull scenario. Bull scenario only after those two, unfortunately. The bear scenario, however, overall as a bear count. Why is that labeled as a bear count? Because this first structure could be labeled as a three-way structure, which is a W on primary degree, and we would be correctively climbing up. Now, what's the difference here? Obviously, is that the bullish scenario would be looking for much higher, possibly later if this becomes a wave 1, 2, but the bearish scenario would be topping out and then creating a massive correction before any kind of other opportunities. So that's why this is called bear count and the other one is bull, because based on the higher time frame. Now, overall, what is going on here is an ABC zigzag into WABC expanded flat. Okay, I know that this is again only possible on log scale. If we are looking at this on arithmetic scale, you can see this is very out of proportion. But these are the two counts that I got at the moment. The issue that I have here is this structure. I can't really make this into being a three-way structure that easily. Sure, you could have this as 3. Maybe this is the like structure that corrects this whole thing, and then we have another three-way structure. That is very possible, and that would be the variation of this structure over here. And at that point again, we would start a new count from these lows, and then this wave 2 or wave B would be starting from here, these lows. But to me, again, I'm not quite sure if I like that, because this on arithmetic scale would be the correction that would correct this whole thing and be the connector for this leg. And you see that there's no like relation between those two. So that's why I have these two instead. But again, this is definitely possible to label as such as well. And instead of having the count end here as a diagonal, we would have another larger diagonal here that could be actually starting maybe from these highs here as a wave 4. So 1, 2, 1, 2, 3, 4, 5, 3, 4, and 5. So the diagonal should be actually labeled like such. But yeah, that count would end in these. Now the major difference against the bull count is that this pump, instead of being a end of something or a C wave, this would be a wave A, or that's wave 1. If you're super bullish in the scenario where I was talking about, where it would be actually that three-way structure ending here. But to me, that is less likely. So I'll have these two instead. So in here, again, very possible that this is done. Smaller time frames do give us some divergences in here, but I'm not quite sure if those are the most relevant. It could be that we have a 5 wave here already complete, or again, as mentioned, that we are creating that 4th and 5th before a correction for that potential B wave and then move up. So a couple of different variations overall. Unfortunately, if we create that expanded flat, I think we would target these lows first. We have a potential previous wave 4 here as well, so we should not go past that too much. Of course, we could create a swing failure of these lows here around $18 and then continue up. If that is the case, I would think that this is more likely to be a B wave, to be honest, because the retracement is going to be that deep and not a wave 4 anymore, because it is taking so much time. It is already very large to be a wave 4, so again, if that happens, more likely to be a B wave instead of anything else. And of course, have some thought about how low this could go based on the extensions of these fibs. So depending, once we take out the high, are we creating an expanded flat? It shouldn't really go past the 1.618 here. Of course, this is pivoted depending on where where this is pivoting actually. But yeah, shouldn't go past the 1.618. Potentially have the stop at 2-to-1 extension if you want to be looking for a long setup. Of course, the better way to look is look at these areas of interest, look for a pivot, and then go long against the low, and then you would be looking for that ABC pattern overall. And that would be the way you would be targeting AVAX, and then you would be expecting a massive run here again towards the all-time highs. Again, not too many of altcoins have even rallied this much. From the lows, we have gone like almost 450%, or around 450%, and retraced from the all-time highs is now 70%. So not quite many of the altcoins have actually retraced already this much. So that is significant for AVAX and somewhat really bullish. Some of the other altcoins are still here, basically in the very much more of an accumulation phase, while AVAX has already taken off. And yeah, while this is overall bearish, I would see this bullish locally midterm. So those are the two ideas. We have some major targets up in here that probably are not worth discussing about yet. This is just based on the pivot of this X wave here, and the 1-to-1 compared to wave W here would be around $640. That is again a bit too moon bullish for me, so I would be looking for 1-to-1 of this move instead. Of course, if this extends and starts to create some kind of rally, then we can start to talk about the more bullish scenario, which I was mentioning earlier, where this would be the end of that 3-wave here, and then we would have a 1, 2, 3, 4, 5 consolidation, and then boom again. But yeah, those are way too far away from the current prices, and I don't want to be talking about those until something happens to both these counts. But yeah, those are the macro views for AVAX. If you're interested in getting any kind of signal service, check us out on CanTrendCapital.com and join our Discord from there. But that's all for now for this video. Thanks for watching again, and see you in the Discord. Bye bye.